Here are the crypto top headlines covered in this video. What the SEC's lawsuit with Coinbase means for the exchange's pivotal role in spot Bitcoin ETFs. Next, Gary Gensler issues warning on crypto ahead of potential spot Bitcoin ETF approval. Also, spot Bitcoin ETF fee war begins. Issuers amend S1 filings with lower sponsor fees. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline: what the SEC's lawsuit with Coinbase means for the exchange's pivotal role in spot Bitcoin ETFs. If the SEC decides to approve a spot Bitcoin ETF in the coming days, as some analysts expect, Coinbase would have a substantial role by providing trading and custody for major financial firms such as BlackRock, Franklin Templeton, and Grayscale Investments. Coinbase has also been embroiled in a legal battle with the SEC over the past year after the agency accused it of operating as an unregistered exchange, broker, and clearing agency. As hype swarms in on the potential approval of the first U.S. spot Bitcoin exchange-traded fund in the coming days, another lingering tangential component remains: Coinbase's legal battle with the Securities and Exchange Commission. If the SEC decides to approve a spot Bitcoin ETF, as some analysts expect, Coinbase would have a substantial role by providing trading and custody services for major financial firms such as BlackRock, Franklin Templeton, and Grayscale Investments. It recently hired a new executive to head its custody department. The developments would come as the exchange has been embroiled in the separate legal battle with the SEC over the past year after the agency accused it of operating as an unregistered exchange, broker, and clearing agency. Coinbase has pushed back on those claims, arguing for the case to be dismissed and accusing the regulator of taking a regulation by enforcement approach. Ongoing legal battle. SEC Chair Gary Gensler has said repeatedly that crypto exchanges need to register with his agency and said investors should be protected in the same way as they are with traditional regulated exchanges. Coinbase has called for new digital asset regulation. Coinbase's ongoing legal battle with the SEC does not prevent it from taking on a custodial or market surveillance function, said Ashley Ebersole, general counsel at 0x Labs and a former SEC lawyer. If the SEC prevailed in the legal battle, and a court order concluded that Coinbase violated the law, that could complicate things, particularly for the custodial role, Ebersole said. But SEC v. Coinbase's outcome still remains a very open question. Nate Garachi, president of investment advisor, the ETF Store, said Coinbase is in a unique position given its ongoing lawsuit with the SEC and how heavily intertwined the company will be with spot Bitcoin ETFs. However, Coinbase's role as a custodian and their willingness to enter into surveillance sharing agreements with major stock exchanges is something the SEC could view as a positive, Garachi said. The SEC's ultimate desire is to have regulatory oversight of crypto exchanges. Coinbase's integral role in spot Bitcoin ETFs brings the SEC a step closer to satiating that desire, Garachi said. The SEC named Coinbase Inc. and Coinbase Global Inc. in the lawsuit it brought in June. The latter is the parent company of Coinbase Custody Trust Company, LLC, the custodian named for many of the spot Bitcoin ETF applications, which is not itself named in the lawsuit. A person familiar with the situation said the service provided by CCTC is not an issue in the case with the SEC. The lawsuit won't have an effect on Coinbase's custody role in spot Bitcoin ETFs, the person familiar continued, while noting that the SEC has said Bitcoin is not a security. Tension rises. Ahead of a potential approval for a spot Bitcoin ETF, SEC Chair Gensler warned investors in a post on X on Monday morning about the risks involved with investing in crypto. Investments in crypto assets also can be exceptionally risky and are often volatile, he wrote. A number of major platforms in crypto assets have become insolvent and/or lost value. Investments in crypto assets continue to be subject to significant risk. Public Citizen, a consumer advocacy group which has been critical of crypto, pushed back against Grayscale Investments' application for a spot Bitcoin ETF in a December letter to the SEC. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Gary Gensler issues warning on crypto ahead of potential spot Bitcoin ETF approval. As many expect SEC approval of a spot Bitcoin exchange-traded product to be incoming, the Commission's chair warned crypto investments can be exceptionally risky and volatile. United States Securities and Exchange Commission Chair Gary Gensler posted a thread on social media platform X as many asset managers await the final word on approval or denial of their spot Bitcoin exchange-traded fund applications. In a January 8th X post, Gensler called on crypto investors to keep some things in mind without specifically mentioning a spot Bitcoin ETF. According to the SEC chair, asset managers may not be complying with federal securities laws by offering crypto investment vehicles, and crypto can be exceptionally risky and often volatile. Fraudsters continue to exploit the rising popularity of crypto assets to lure retail investors into scams, said Gensler. These investments continue to be replete with fraud, bogus coin offerings, Ponzi and pyramid schemes, and outright theft where a project promoter disappears with investors' money. The SEC chair's remarks at 3:40 p.m. UTC came roughly 2 hours after several spot Bitcoin ETF issuers filed amended S1 applications with the Commission, one of the last moves toward potentially approving the investment vehicle in the United States. Though it's uncertain at the time of publication whether the SEC will approve one or many at the same time, applications are in for Valkyrie, WisdomTree, BlackRock, Van Eck, Invesco, and Galaxy, Grayscale, ARK Invest, and 21 Shares, Fidelity, Bitwise, and Franklin Templeton. Many have criticized Gensler for the SEC not approving a spot crypto ETF despite years' worth of applications from numerous asset managers. Regulators in Canada allowed firms to list spot Bitcoin ETFs on exchanges starting in 2021. The S1 filings on January 8th were expected, part of a deadline from the SEC following many 19B-4 filings on January 5th. While both suggested a forward move for the SEC to allow crypto ETF listings on U.S. exchanges, they do not guarantee approval. The Commission still has the option of denying applications, but it would likely need to do so for different reasons than it previously used for other ETFs. In August, a federal judge ordered the SEC to revisit a spot BTC ETF application from Grayscale, claiming the Commission was arbitrary and capricious in denying the investment vehicle. Our next top headline, Spot Bitcoin ETF fee war begins. Issuers amend S1 filings with lower sponsor fees. Issuers of potential spot Bitcoin ETFs that are awaiting SEC approval have filed amendments to their S1 forms, which include new competitive fee rates, some as low as 0.24%. The anticipation for the decision from the United States Securities and Exchange Commission on spot Bitcoin exchange-traded funds, or ETFs, continues as multiple applicants filed their final S-1 form amendments on January 8th. Valkyrie was the first company to file its final S-1 amendment, followed by WisdomTree, BlackRock, VanEck, Invesco and Galaxy, Grayscale, and ARK Invest in 21 shares. Among the amendments, many of the applicants have also included lower fees, raising the bar of competitiveness between the various ETF offerings. The lowest sponsor fee for the currently filed ETFs is from Bitwise, with no fee for the first 6 months and the first $1 billion in assets, followed by a 0.2% fee. This is followed by ARK Invest in 21 shares, also listing no fee for the first 6 months or until $1 billion in assets, after which they will enforce a fee of 0.25%. Bloomberg market analyst Eric Balchunas called the drop in ARK in 21 shares fees from 0.8% to 0.25% breathtaking. Balchunas said, "The fee wars are intense, but that's another level." VanEck listed a 0.25%, Franklin a 0.29% fee, and Fidelity a 0.39% fee. Global asset manager BlackRock set its fee for the iShare ETF at 0.2% for the first 12 months or until the first $5 billion, then hiked it up to 0.3% as the ongoing fee. On the higher end of the fees, WisdomTree comes in at 0.5%, Galaxy and Invesco offered the first 6 months with no fee, followed by a 0.59% fee, Valkyrie has a 0.8% fee, and Hashdex has a sponsor fee of 0.9%. Grayscale dropped its fee from 2% to its newly listed fee of 1.5%, which currently comes in as the most expensive of the pack. Research and market analyst James Seifert posted on X to be mindful that these are not finalized and said he wouldn't be surprised by even more fee drops. Amid all the revisions to spot Bitcoin ETFs, Balchunas said it would be interesting to see if this influences cryptocurrency exchanges to respond with their own fee cuts before it's too late. Balchunas also posted a reminder that the temporary fee waivers historically haven't moved the needle much, and that advisors tend to focus on the regular fees because they are long-term investors. However, he did say it could possibly matter in this case, given that the ETFs all do the same thing. As the final amendments come in, the next stage in the decision-making process is anticipated to be a vote by SEC commissioners. Markets have been forecasting the debut of the ETF on or around January 11th. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.